All right. We're up.
Go Army.
Go Navy. Beat Army. Yeah, it's a big weekend.
Yeah,
Big Army Navy weekend.
the show's going to come out after the game. We, if you guys haven't caught in the million times we talked about it, I was in the Army and Jerry was in the Navy. And Jerry actually went to the Naval Academy. I did not go to West Point, but I went through officer training with a bunch of West Pointers, so I kind of got, hooked into
Army Navy game?
in their world in Army Navy. Yeah, it was fun. I went through officer training after being in the Army for like 16 or 18 years already.
That must have been
And these
fabulous.
kids, yeah, it was fun hanging out with those kids, and still kind of keep in touch with a lot of them today. But yeah, so as you guys are watching this, the game is already played. But for us, this is Friday afternoon, and we got the game tomorrow. So big rivalry, lots of fun. Hopefully you guys watched it. It's America's game.
America's game. It's always great. It's my favorite football game to watch.
Yeah, I don't really like make that much of an effort to watch a football game anymore. I will try to root for my teams, but this is one that, like, we actually were going to go to the game this year and decided not to because
work out.
Boston is too cold and too far away.
Yeah. Next year though, DC.
Yeah, you guys, we'll have to do we'll have to do the podcast from there or something.
That'd be kind of cool.
Yeah. I don't know if we'll be able to be sober, but
yeah, well, maybe we'll be reading the charts better that way.
All right. What you got for us?
Made the best team win and all that as the slides.
What do they say? The only game where both teams wrote a check, or I don't know. There's some kind of saying.
There's a couple of things.
Yeah.
I should know it and I don't.
Anyway.
All right. So, podcast 10 December 2023. So we're going to basically, we haven't done a bunch of charts in a while. I've pulled a bunch of articles over the past few weeks, and that's what we've been going through. But this is going to be basically all charts. So not going to do too much of a deep dive into them, but we're going to go through and hopefully it gives you guys an idea of what we look at and how different ways you can use charts. So take a look at ratio charts, and then TSP ratio charts. We just put up a link. It's the live version is for members only, but the static version is up there, right? For if you're not a subscriber to the site.
For what?
For the ratio charts for TSP.
No, the TSP chart. The ratio charts are only for members.
Okay.
Yeah. Sorry, guys.
All right. Well, I'm going to give you a preview anyway. If you're not a subscriber,
yeah, we have live charts on our website that are viewable to the public. They are from CoiFin and TradingView. We added TradingView recently, so we already had the other. And TradingView is awesome if you haven't used it. And then members have access to a series we did on how to build charts. Right. We did that a long time ago, using stockcharts.com mosely, just because at the time it still is free.
Yeah,
you
can get a free version.
And that's harder and harder nowadays with TradingView. Not so much. There is a free version, but the bottom line is you want to be able to save these things once you put them together. You don't have to do it every time, and that's kind of where the cost comes in. But yeah, we have these ratio charts live. Live meaning they're up to date on TradingView. Right. It's just a view only. And then if you want to save it, you can if you have a TradingView account.
Yep. So we're going to take a look at the ratio chart. It's really good because it shows you when the C fund is outperforming the S fund or vice versa, and the I fund and all that. And then just some trends to watch that I'm kind of following, and we'll take a look at the TSP fund charts. So ratio charts. So a ratio chart is you're taking one, in this case, it's XLE divided by SPX. Okay, so you're taking XLE is there are 11 sectors in the S&P 500. XLE is a ticker symbol for the energy sector. And if you divide it by the S&P 500, it tells you when energy is outperforming the S&P. Okay, so that could be, they could both be going down together. Right, but if XLE is going down less than the SPX, the line will be going up because it's outperforming. So it doesn't tell you the direction of the XLE. It tells you the relative performance of it relative to the S&P 500. Okay, so if the numerator is getting bigger than the denominator, the line's going up. Okay, so if the denominator is getting bigger, the line's going down. So in this case, XLE versus SPX. So back here in 1999, the energy sector outperformed the S&P. Okay, and then we had a long period from 2009 to 2021 where energy underperformed. Okay, so where we're at now, and this is one of the most important charts to take away from this whole thing, really, because energy had been in a long-term underperformance versus the S&P 500. And we just started this new, what a lot of economists think is a new cyclical bull market in energy. So we had a big run-up in 2022, had a pullback in 2023, and the expectation is that energy now is going to outperform. So energy costs go higher. I mean, you can extrapolate a lot of things out of that chart. And coming out of this really long relative decline, energy is in a great place to move higher. So that basically is saying oil prices go up, gas prices go up, all that. Okay. This is industrials versus the S&P. It's a weekly chart. Okay, so each tick, a green tick is an up week, a red tick is a down week. So industrials in 2022, the market was down, but industrials were outperforming the S&P 500. So if you were in industrials, you were losing less than you would if you were in the overall S&P, right? But the takeaway kind of is, in 2022, industrials were up. In 2023, industrials are down. And so it's very likely that what happens is the sector rotation that we talk about, the sectors that get beaten up one year tend to outperform the next year. And so industrials were down in 2023, and we get an uptick in the last 2 weeks. And again, a lot of economists think that commodities, industrials are really what's going to drive the economy forward once this kind of malaise ends. And so industrials are already starting to pick up. Tech. So we know tech has been driving the market higher in 2023, right? It's outperforming the S&P 500. In 2022, it was in this corrective phase, right? Tech was leading the market down in 2022, and it led it back up in 2023. So a lot of people are looking at tech, particularly the Magnificent Seven, as basically topping out here, and then tech takes a breather, and the S&P rotates into, industrials, energy, some of the other sectors, and hopefully those sectors can continue to drive the overall index higher. Consumer staples, XLP, are the things that people need versus what they want. And so in 2022, as you would expect, as the overall market is going down, people are buying less of what they want and more of what they need. So consumer staples were outperforming the overall S&P in 2022. And then 23, everybody's buying tech. They're all consumer discretionary, communication services and tech. They're not buying consumer staples. So if consumer staples tend to do really well when the economy does not do well. So we'll see what happens here. Tech or consumer staples has not picked up, right? Which is a good sign. You can extrapolate that out as a good sign for the economy, because if people can stay with buying tech and consumer discretionaries, this ratio keeps going down. And real estate. So I want to throw this one in there, just because, as you would expect, real estate, when rates were at the lowest, right? Real estate is doing great. When rates start going up and affecting home buying, real estate goes down relative to the S&P. And now we have an uptick. Why do we have this uptick? Because rates have fallen in the last few weeks. So it'll be interesting to see whether or not, if this downtrend line, are we at a peak? Are we going to get resistance here? And rates go back up, real estate relatively goes back down. You know, if this keeps going and we break this trend line, there's a good chance that rates keep going down. So different ways to use ratio charts. They can tell us a lot. And then the last one is healthcare. Healthcare, you know, it's along the lines of what people need, right? So it did well, relatively speaking, in 2022. Took a big correction relative to the S&P in 2023. Hasn't really peaked back up yet, but healthcare is definitely something that I would expect goes much higher in the future. Okay. All right, so the TSP ratio chart that we're talking about, this is obviously a static picture of it. And like we said, in the live charts, if you're a subscriber to the site, this dot is what the ratio is at the time, like minute to minute. So you can see what's actually happening. So the point of this is, the top one is the C fund divided by the S fund. So when the numerator is going up versus the denominator, it means the numerator is outperforming. So when this line is going up, the C fund is outperforming the S fund. Okay. When it's going down, the S fund is outperforming the C fund. So in the second one, you got C fund versus the I fund. So from 2016 to 2018, basically they performed the same, right? On a relative basis, they were the same. So on any given day, they would go up and down, but over that period of time, the percentage moves up and down were basically the same. And then from 2018 to 2022, the C fund was outperforming the I fund. And then if you guys remember, there was a big tick down when the I fund, in October of 22, the I fund really outperformed the C and the S fund for a little bit of time. And then it's, you know, since then it's the C fund has taken over, and now the C fund is outperforming. And the last one is the S fund versus the I fund, right? So when the S fund is going up, it's outperforming the I fund. It's been in this down channel, you know, it was from 2021 because the S fund was underperforming until that bottom in June. So the way you can use this is to try to decide when you're making reallocation decisions, you want to be in the funds that are outperforming. So if the market in general is going up, that's great. It's better to be in the fund that's outperforming. So let's say from 2021, the C fund is outperforming the S fund. The C fund is also outperforming the I fund. So 100% C fund is the best place that you can be during that time period, right? In this little piece back here, the S fund, because if you remember, after COVID, the S fund exploded, and it way outperformed the C fund, and it also way outperformed the I fund, because this is S over I. So S fund way outperformed the I and way outperformed the C, and so S fund, 100% S fund was where you wanted to be at that time. So that's how you would use it, and then going forward, I mean, most of the time, they're relatively flat, right? But if you want to try to kind of game it a little bit and be in the funds that's outperforming, that's how you would do it. Okay. All right, so a couple trends I'm kind of watching. The dollar, right? Super important. Jobs report came out Friday morning and kind of put everything in a bit of a tailspin. So right now, the dollar is actually at the peak of the week. So this is a weekly chart. We clearly have a peak in the dollar here. Have a pretty good correction. The dollar moves higher. That's when stocks are under pressure. The dollar has been falling during this rally that we had since July. And this week, the dollar is picking back up. So if the dollar continues higher, stocks are definitely under pressure. So I did the Fibonacci retracement tool here. From the low in the dollar to the peak, it pulled back right to that 0.618 retracement level, which is the most common retracement level for a pullback. So what this chart looks like is this is a pretty significant bottom, and we have a 1, 2, and the dollar moves higher. Right? It's not confirmed yet, but that's what it looks like on this chart, which would be bad for stocks. Okay. 10-year Treasury yield. So yield bottomed back here in 2020. We had a really good 1, 2, 3, 4, 5 Elliott wave count for a peak at 5% in yield. And then since then, it's been going down. And when yield goes down, the price of the F fund goes up. Okay. So right now, we're back to a 50% retracement from that recent low. So it'll be really interesting to see either we get support at the 50% or the 61.8%, but at some point in here, we're going to have to get a correction in yield, even if it's going to continue down lower. We should get some kind of a correction, which means yield goes higher for a bit, which means the F fund goes down, and it's also not good for stocks. So the big question is going to be what happens after we get this pullback. We have a move down, a pullback. If we get, say rates come down to 3.5%, like that'd be great for mortgage prices, right? So at some point we correct this move, and then once we correct this move, it keeps going up. So in the short term, we're looking for yields to put in some kind of bottom here and do a correction to this move, and then we'll see what happens. It's too far out in the future, but you get the idea. And then the last one is gold. So this is going back to 2005. Gold had a big run up. A lot of people talk about gold right now as the, this is a lot of talk, a lot of commercials. Everybody's really pushing on gold. We've got basically these peaks. You could argue that gold is starting to break out here. I'm not quite there yet, but I'm definitely watching it. It's been in this, long-term cup and handle since 2011. So I would say a breakout is pretty imminent. And with such a long-term basing structure, at some point, once we break out here, gold keeps moving higher. And that's, again, part of the narrative that commodities, precious metals, industrials, all that is what drives the economy once we get done with this expected downturn, whether or not we ever get it. Okay. TSP fund charts. So we hadn't done the actual charts in a while, all four of them. This is a weekly of the C fund. And we talk about divergence all the time. We got overbought on RSI back here in July. And we have this correction. We didn't get too oversold at the bottom of that correction. We had a rally back up, and we're at a double top now, right? But RSI is nowhere near as high as it was at the prior peak. So that's definitely setting up for divergence. If price continues higher, but RSI does not get above the previous peak, it's setting us up for a decline, which, again, is consistent with what a lot of people are talking about the first quarter of next year. So something to definitely keep on the radar. MACD looks good. It's moving in the right direction, but this divergence is something definitely to watch. S fund. It's the best example of the economy. The S&P 500 is 500 companies, and of that, 7 of them have created the most gains in the S&P this year. The other 493 companies in the S&P have basically looked like this, and the S fund is actually of the 5,000 or so companies traded in the U.S., the S fund is basically representative of the 4,500 below the S&P 500. So while the S&P has had this big move higher, the rest of the economy has not. And again, we're potentially, well, this would not be divergence. We're still below, price is still below, RSI is below. So that's kind of what you would expect. But a lot of people are thinking now, because the S fund, so the bottom, 4,500 companies in the U.S. have basically been in recession. They haven't moved anywhere since, say, June of 22. If tech starts to pull back and investment dollars rotate from what's undervalued, which is this is all undervalued right now, versus the S&P 500, then the S fund should outperform the C fund going forward. There's a lot of talk on Bloomberg and CNBC, if you guys watch those, that small caps, if the economy starts doing well, rates come down, small caps should outperform as tech starts to pull back. iFund, same kind of thing. This is where we said iFund was really outperforming on that ratio chart. That's where that was, and then it started to flatten off. So iFund hasn't done much in 2023, right? It's basically flat for the year. But once we get above this peak, again, iFund could do really well going forward. And the F fund, so you can't really see it so well in this chart because it's been declining for so long. But this is a significant bottom. This is the bottom of the 3. This is a really significant bottom right here. This is the bottom of a 5 wave, and so you can see, at least on this chart, going back to 2020 sometime, we don't have anything that looks like this. This is a big positive move for bonds right now. Short term, they're pretty overbought, right? You get 1, 2, 3, 4, 5, 6, 7 weeks of increasing price in the F fund. So it's probably due for a pullback, and as long as it doesn't break below that 20-week moving average line, which honestly, that's what I would expect. I expect it to get support there, and bonds keep moving higher. Okay. We haven't done charts in a while, and I just wanted to kind of get back to the basic charting and some things that I'm looking at. And the newsletter this weekend is going to be pretty interesting because there's a lot of stuff going on. Some things that are interesting in the dollar. The dollar has been going up in the last this week and some of last week. But stocks have not pulled back. So there's a lot of interesting things going on that are sort of not consistent with what ordinarily happens.
Yeah, to say the least.
Yeah.
So you see there, if you like what you see here on the podcast, you like all the analysis that we provide. We do education and analysis on our site, growmytsp.com. If you guys have any questions about the stuff that we talk about in the podcast, be sure to put it in the comment section wherever you find the video. If there's no comment section, you can shoot us an email at support@growmytsp.com, and the support team will get it over to us. We love comments. We love questions because it gives us stuff to talk about. Yep, and sometimes definitely. We're coming up with, there's never nothing. There's never not anything to talk about. But, it's nice to get questions and give us something that's, people are pondering, if you will.
Yep, absolutely.
And hopefully Army won yesterday.
We shall see. Y'all are favored by 3 points, so we'll see how that goes.
I know. Don't you want us to win the Commander's Cup? We beat Air Force.
Yes, I do want you to win the Commander's Cup. It
would make Ox so happy.
It would. We have to get Ox on here one
He's
time.
A friend of ours that was an Air Force guy, so it'll make him happy. All right. Hope you guys have a great week, and hope everybody is getting their Christmas shopping done and their holiday shopping and their holiday whatevers. And
I think that's what we're off to do.
Yeah, absolutely. All right. Take care, guys. We will see you soon.
Out of here.